In this presentation, we will take a look at one of our options, the simple option, for the recording of equipment that was purchased and financed for. In other words, we've got a piece of equipment that was purchased for $15,000. It was paid, they paid down $9,000 for it, financed the $6,000 on it. We noted as we went through our process. For more accounting information and accounting courses, visit our website at accountinginstruction.info. In our notes that we went through, as we saw these on the bank statement, we said, we saw this $9,000 clear the bank statement. That's what we have recorded. That's what we have in our system. Now we need to know what we do with that. Well, we've determined that it is equipment. However, the $9,000 isn't all that the equipment cost. It cost the $9,000 plus the financing on it. But we're going to do the simple method here and just record this information, this equipment, for the $9,000. So of the three methods, we can either just record it as the $9,000 or we can record the loan as well. In our method here, the simple method, we're going to record the $9,000. We're going to tell the client, hey, you want to, any equipment you have, there shouldn't be too many purchases because these are large pieces of equipment. So I wouldn't think there would be many, especially for a smaller client. We're going to record the cash that was paid. You want to provide that information to your tax preparer or accountant at the end of the year to do any adjusting entries and record any interest related to it, as well as the depreciation that should be deducted for taxes on the books as well. And note also that depreciation should be deducted on books, not just taxes as well, but not on a cash basis. So for a cash basis, there's no depreciation. And also note that on a cash basis, we might just expense the entire piece of equipment, but that's a little too extreme for even a cash basis. Even a cash basis, we don't usually expense the entire $9,000. We would still put it on the books and think of it as an asset typically. So that's what we're going to do here. We're going to put it on the books as an asset, depend on the accountant at the end of the year to create the deductions related to it, the financing deductions, expenses, as well as the depreciation expense calculation. In order to do this, we're going to open up our simple bookkeeping file. And you could also open a backup file that will take you to this point in time. We're going to go to the QuickBooks data file, QuickBooks 1, the simple file. This is going to be done the easy way. Here we have the Home tab open. We have the Open Windows open. You can open the Open Windows by going to the View dropdown and the Open Windows list. So what we have now, let's take a look at the report. We know that on our open items, we have this 9,000 was check number 1008. We could find it on the check register, but it's probably easier to go to the reports and find it and then drill down on it. So let's do that. We're going to go back over here. We're going to find our two reports. We're going to go to Reports drop down up top. We're going to go to Company and Financial. One of the major reports will be the balance sheet. So let's open up that balance sheet. Let's change the date range up top to Customize Report Date, changing that date range from 01/01/19 to 01/31/19, January 1st, 2019 to January 31st, 2019, the month of January 2019. Okay. Now we could find this in the checking account by double-clicking on it and looking for that 9,000. There it is. There's the check number. Probably that's one way to go. It's probably easier to do this on the other side where we put the information, because that's where we put it into the unknown accounts, the uncategorized income or an expense in this case. And that's on the profit and loss, P&L, or income statement. So let's close this back out. Go to Reports up top. Scroll down to Company and Financial. And then open the Profit and Loss report. Changing the date range once again to 01/01/19 to 01/31/19. And then we'll scroll down, and in the uncategorized expense, we're going to have that 9,000. We didn't know where to put it. That's where we put all the uncategorized stuff. This is the easier place to find it. Once we've categorized everything, this large uncategorized expense hopefully should go down to 0. So we're going to double click on that, find that 9,000. Here's the 9,000 and double click on that. So here we have it. Now here's our uncategorized item. This is what we need to change because it's still a check. It still came out of the account. It's still cleared. That is what it is. What we need to do now is put it to another account. Now, although it says expenses up here, we could have expenses or assets. The real differentiation between these tabs are expenses versus items, which are inventory items, which we're not going to deal with at all. We'll touch on it just to talk about inventory items, but we are in the expenses tab. And so what we need to do then is put this not into an expense, but into an asset. And this is the kind of the tricky thing, because normally under a cash basis, we would just expense everything whenever we use it. That's what a cash basis is. Whenever we paid for it, we should expense it. That's what a cash basis is. However, even under a cash basis, if we paid for something that's really expensive, like the equipment being $9,000 is pretty large expense, then even then we deviate. We're really deviating from a cash basis at this point. But we have to do that because it's a big purchase, and that means we have to put it on the balance sheet. So remember that if you see any big numbers that have purchases, then that's when we kind of deviate, and we have to say the account type is not going to be an expense account, but a balance sheet account. Now, the QuickBooks will already have set one up. It's called a fixed asset account, and that just means that it's going to be moved from the profit and loss to the balance sheet as an asset as opposed to something expensed. So it should be set up for us already here, and so we don't have to add it. Just note what type of account it is. It's a fixed asset account, and we'll see what that does. So we're going to go into the furniture and equipment, call it that. If we want to change the name, if it was a car or something like that, we could make another account called auto. Just make sure it's going to be a fixed asset type of account to put it into auto or something like that. If we wanted to call it just equipment, then we could change the name of this account, or we could make another account. Just make sure the key is that it's called a fixed asset account and not an expense type account. And just to show you that, if we went into the lists here and chart of accounts, if you made a new account, you want to make sure the account type is this one, fixed asset. That's what you're looking for. So whatever you name it, just make it that type of account. Okay, so we'll close this back out, closing this back out. And now we're just going to pick that. That's all we have to do. And I'm going to say save and close. And yep, we changed it. That's fine. And notice it's still cleared. We still reconciled the bank account. It didn't change it didn't, remove the check. Still a cleared check. And so if we close this back, but it did disappear from the transaction report here for the uncategorized. And that's what we want. Where did it go? If we close this back out, then it's nowhere on the income statement now, because we made it not an expense type account. We put it on the balance sheet. So if we go to the balance sheet up top, we're going to say refresh. And now it's here. So it's still going out of cash. That didn't change. We paid cash. But the other side of it now is on the balance sheet. So cash went down. The expense didn't go up, but a fixed asset went up. If we double click on that, there it is. There's our item. Now, of course, you can still find this on the check register by going to banking and going to use register. It's check 1008. So if we go up, we're looking for 1008 check number. Let's see what the date was on our open items. The date was 113. So 113, here it is. So here's our check. It's still cleared. And now we've just changed this number. We could have gone to the register and changed it here, but if we just double click on that check, that's the check. We changed this item. So that's going to be the difference between that. That's the easy way. If we go back to the balance sheet, open Windows, balance sheet. So now note that that number really isn't right, because it should be 15 according to our information here. 15, but in terms of the year-end financial statements, the real question is what is going to be, if we're using taxes, what are we going to use for the taxes? Mainly the profit and loss. And no matter what happens, we're going to have to provide to the tax preparer, to do this properly, the actual documentation so that they can write down the 15, and they're still going to have to calculate based on the documentation that we will provide to them. We're going to say, client, give the bookkeeper the documentation so that they can record the proper amount for the fixed asset, mainly not just to have the balance sheet, because the tax return might not report the balance sheet, mainly to calculate the tax depreciation on it. And us as the bookkeeper, we probably don't want to touch the calculation of depreciation on a tax basis. We're going to need the tax preparer in some way to do that. So, and again, the simplest method of doing that is not to have two methods of depreciation and whatnot. We're trying to be simple here. We're going to let the tax depreciation be what we use as the depreciation. So we're going to give them that information. Also, what we don't have here is a loan amount because we didn't put the loan on the books. And so we have no loan. But again, the loan is something that's not going to be on the income statement, on the profit and loss. That will be something that will be deductible for basically using the taxes. What will be, however, is possibly the interest portion of the payments on the loans. So the thing that will identify that there is a loan that we will pick up, because it will clear the bank statement, will be the payments on the loans. And once we see those, we're going to have to figure out what to do with those. And that's when that'll come up. And we'll talk about that in the next section when we talk about how to deal with loans. So next time, we're going to go to the next little bit more complicated way to record this, which would be to record the liability as well. Just recognize that when we do this method, we're going to have to provide to the tax preparer any purchase documentation. That's part of the tax preparation process, the year-end process that we'll have to give to the tax preparer. For more accounting information and accounting courses, visit our website at accountinginstruction.info.